Hi everyone, hope you're all doing well, and today I'm doing my US portfolio review, May 2021 edition, and this is the monthly series that I do on the channel where I go through my portfolio and show you how it's all doing, keep that transparency, and even when the stock market is doing absolutely fantastic, I'm always here, and even when the stock market completely falls off the cliff, especially for the growth stock side of it, this last month, I'm still here showing you how everything's going, keeping up that transparency. I'm never going to be one of those guys that kind of hides, stops uploading videos, or only shows the portfolio when the months are great and the stock market's at all-time highs. I'll still be here when we've had a rough month, and it's fair to say we have had a rough month. I'm not going to lie, the amount of pluses I had to change to minuses on positions was tough. Luckily for me, I've been in the stock market a while, and for me, I've been through many dips. I've still got positions that are up 100+%, as well as the ones that I've sold previously as well. You never see them, but I've still got some positions that are up, and I've been through many dips before, and I can really disconnect myself from the stocks and not get stuck on that stock's down and put me in a bad mood or start to get frustrated or a bit depressed. I've seen it all before, and I'm happy with the cycles in the stock market, and I appreciate the dips, and I buy the dips and know that when I start thinking about these companies 2 to 5 years down the line, I'll know I'll make money on them, and it's quite easy for me. But honestly, I was putting in a lot of these minuses on a few of the newer positions, and I was like, if you were actually starting investing in November, December, January, February time, you must be thinking what the heck, because a lot of your positions are probably down. And I thought, fair play if you're still, this is why the stock market is really easy to make money, but not many people do it because of this side of the stock market side where you've got to disconnect your emotions, and you got to have patience. And that's why a lot of people don't get involved in it, or do get involved in it and then go, oh, I'm not about this life, and I'm not going to get involved. I'm going to sell all my positions at a loss, and I'm never going to touch the stock market again. And it's one of those that I think that, especially some of you guys that might be in here through the whole March 2020 situation as well, maybe even some of you guys that went through the last really big dip we had, which I think was the back end of 2018. I think the stock market was down 20% then. When you go from them situations, that I think that's always your first test of okay, I understand the stock market will go down, but great companies come back. And I think that this is the first test we've had, and it's definitely been a month that has been not great, and it's seen some stocks go down, but these are just great buying opportunities, and I'll try spend a little bit of time today talking about them opportunities that I are trying to capitalize on. But if you do want to know exactly when I'm buying, make sure you join the Patreon. The link is in the description. And if you do want to start investing, some brokers in the description as well. And also, very sorry if my voice just doesn't sound normal. I don't know if any of you guys from up north in the UK yesterday, but honestly, it was very windy. It was just pouring it down all day. I had a football match at night time, and literally for someone to hear you on the other side of the pitch, you had to shout pretty loud, and I'm feeling the effects of that this morning. So yeah, we'll see how it goes for the rest of the day, but depending on how it goes, I might just move I know I said a 10k live stream. I said I'll do that at some point. Depending how it goes the rest of the day, I might just knock it back a few days just to give it a little rest, but we'll see how we go. But we'll stop blathering on now. And I always get the question as well, where are your UK stocks? This is my US portfolio. My UK stocks one is separate. I've already done my UK May stocks portfolio this month, so it's already up on the channel, but this is my US ones. I always get a comment on the video saying that where are the UK stocks gone? Yeah, I always do them separate. So yeah, we'll go through my US portfolio. We'll start at the top, we'll make our way around, and I'll try to spend a minute on this portfolio. So at the top, Alibaba, we are currently up 9% on this position. We were up a lot more previously, and at one point I was actually up, I think it was around August 2020 or something like that. I think I was up 50, maybe even more than that, 60-70% on that position. Luckily, I kind of went, that's a very good run for Alibaba, and I took half my profit back then. But we've had a complete reversal at the moment. There's a lot of tension on Chinese stocks at the moment. So yeah, I think that with the Alibaba game plan, I'm actually thinking now that I might take that out at a bit of a. I always thought I might double my position on that one, but I think maybe the same again. I might actually take my profit on Alibaba. I don't like how much the Chinese government's kind of getting involved in that company a little bit now, but I still think it's massively undervalued. And if it was to stay at these prices for a long period of time, I'd probably start buying some more in there. But I haven't recently bought much Alibaba. Next up, Carnival. Carnival's currently down 24%. For you guys that might be your first time watching this video series, you might not know this. Basically, Carnival is a position that I've had for pre-CV. So I've had that company for like 3 years or something. And it was doing okay. And then obviously we had the CV situation, and I was down. At the peak of CV, I think I was down like 80% on that position, which is crazy to think about now. Currently now only down 24%, and for me, that if I was to get to break even, which I hope will be this year when we get some like cruises start going, I'd be very happy just to sell that out at break even now. And it's one of those, sometimes things just don't go how you plan them to go. And back when I was buying this company in, I think it was the back end of 2018, 2019, I never knew that in a year's time we would have a massive CV outbreak, but I knew the company was still going to be pretty solid. I knew that I didn't have to sell out at a loss, and I'll just be very happy to take that out at a break even now. I don't like selling at losses. I've only ever sold one company at a loss in the years that I've been investing, and I don't like taking losses, so I will hold that out flat and then move on from there. Next up, Dropbox, currently up 31% on this one. It's one of the better performers actually this month. I was actually looking at Dropbox a little bit earlier today, actually recording this video, and I looked at Dropbox and I went, this company, like I always said that I think my average on Dropbox is like $18, and I always said that if it got to somewhere around the 30 something range, that'd be where I would probably look to sell. I actually looked and I thought, you know what, the value, it's been so like laid back for so long, like I would actually probably say like $40 it would be somewhere I'd actually sell that now, because you look at the valuation, it's just dropping. I still want like 100% return on that one. Facebook currently up 74%. I've been in this position for a while now. My biggest position when I started investing was always Microsoft, and then after Microsoft, I went to Facebook. And now it switched around quite a bit recently. It went to in mode, and then in mode went to Draftkings very quickly. Facebook was my biggest position for a good, most of 2019, half of 2020. I'm a big fan of Facebook, and if it was ever to have a slump from where it is right now, I'd be very happy to buy. But I'm kind of got the rewards of buying that one in the dip a while ago, and I hope that makes 100% club sometime soon. Gang currently down 20% on Gang. These guys, I weren't down this much, but for some reason earnings were taken negatively, even though the earnings were fantastic, which is just nuts. I am thinking, I'm kind of wary of how much it does make up of a position already, but I'm also kind of thinking that I like Gang, but the problem is I like Draftkings more, and I kind of want to focus on Draftkings a lot more, because that's like the number one player, that's the market leader, that's the brand, and I would rather have my money in Draftkings. Depending on what happens with Draftkings, if Draftkings goes up, then if Gang's still at this where it is now, then I'll probably go back to buying some Gang. But at the moment, I'm focused on Draftkings rather than Gang. But if Draftkings kind of levels out, I will then go back at focusing on Gang, as I do believe it's a very good company, and the earnings that they brought out just completely confirm that for me. Next up is Huya. Currently down 28% on this one. It's very much like Gang. I'm not prioritising buying this one at the moment, even though it's down a fair bit. The reason why is, once again, I just feel like when I compare Huya to Beyond Me, Draftkings, a Tattoo Chef, a Teledoc, I'm thinking those companies are strong companies, market leader companies. Even Beyond Meat, I don't know if I said that one. They're good companies that are not relying on something else, that I think are massive opportunities right now. I look at Huya and I think, right, the only thing holding Huya back, great company, but is the merger. And it's like earnings. I didn't even bother covering earnings because I was like, the earnings once again were solid, but the stock's just not moving anywhere until we get the merger. And how long we've already waited half a year for this, and it still seems like there's nothing out there. The only little snippet we got in the earnings call was very easily brushed aside with not much kind of development, and there's definitely problems there. And until we get something sorted with the Huya merger, I just think it's going to stay at these prices. So while I've got these other amazing companies on the dip that I don't think will be here for much longer, I mean, when I go to do my portfolio review in June time, I'll be very surprised if I see Draftkings, Beyond Meat, Tattoo Chef, Teladoc at these prices again, even in a month's time. So I look at Huya and think, well, this company could be down here for another 3 months yet. So, prioritise the other ones and then come back to Huya. I already got a decent position, and see where it's at from there. So yeah, just need the merger done. I'm starting to get a little bit annoyed with management because we just need the merger either done or just knock it on the head, because it's just that uncertainty and kind of relying on something else is what's holding this company back at the moment. JD.com currently up 228%. This has pulled back a huge amount. We were up last portfolio review. We were up like 340%. A massive pullback on this one. And if I didn't already have shares, on this dip, I'd actually really be considering actually buying some JD.com shares. Great company. Microsoft up 102%. Like I said, that was my biggest position through 2017, 2018, and even until most of 2019, until Facebook came in. So yeah, got a lot of shares there. Nice dividend I always get as well from that one, which I never really say actually about that, but yeah, I'm just happy to carry on holding that one. I love Microsoft. The only problem is now the valuation. When I started buying Microsoft at these sort of prices, Microsoft was like a PE of like 22. It's now like a PE of 34 or something. And yeah, it's just a lot more expensive than what it used to be. But Facebook's now like very similar to what Microsoft was back in that day. Facebook's like a PE of 22, and Facebook should be a PE way higher than that. So yeah. Pinterest, once again, this pulled back a lot. This was up 200% last portfolio review. Very much considered buying some Pinterest recently, but just because I'm already up so much and I've got a decent position, I thought just let it keep running. If I did actually not hold a position in Pinterest, or if I sold out all my position in Pinterest, then maybe I would have considered buying a few weeks ago. But yeah, just happy to let that run. One of the newer positions here, which is Teladoc, currently down 9% on that one. Building up a very nice position. This is like, I'm very happy how I managed to build this position in Teladoc. Like, my average is very good. My averaging down's been very good. The position weighting on the portfolio is very good. I could even afford to buy probably one more time on this one. So yeah, we'll see exactly how that carries on working. But I'm very happy with how this is working out. It's a position that's probably about a month old. So yeah. And I still can't believe the drop it's had. It's to be pre-CV prices is just crazy. Visa, just a nice car holding, 28% up. And then Walt Disney shares up 8%. Those are the shares I actually started buying like back end of 2019, 2020, before the CV situation. So just to be even up on them compared to something like a Carnival is pretty good going. So this is my trading 2 and 2 portfolio. So these, there's a few more stocks in here, but there's a couple of repeats from the other portfolio as well. I would like to just drop this portfolio by about 3 positions over the next 12 months. I just feel like I'm a bit position heavy in this one. That's my only criticism that I do have compared to the other one. So I am kind of looking that, hopefully by the time we get around to the back end of 2021, I'm probably 3 positions shorter in this portfolio. Obviously in the other one, I would love to get break even on Carnival this year and get rid of that one. But I'll kind of talk through like what I am kind of looking to get rid of. As I go around. So Walt Disney 48%. That's what I kind of started buying in the CV dip. It used to be up a bit more, but earnings brought it down. I knew earnings were going to bring it down as well. I said on the earnings preview, I said Disney, it's going to be a tricky quarter for them because I think Disney Plus numbers are going to slow down and parks are still not at the peak yet. They're going to get there very soon, but they're still not at the peak. And yeah, it happened. We've got Alibaba shares that are down 6%. That's probably one that I'm actually considering that if I can get a bit of a rebound this year, I might actually get rid of. We'll see. Amazon, which is just flat at 0%. Beyond Meat here, which is down 12%. Very happy with the position size. Very happy how I've averaged in there. Obviously, it's had a couple of rough months. I think that if the food service part of the business starts recovering, you know, it will do very well, which it's starting to do. So yeah, I think that could be, yeah, I think I should be up a little bit by that one by the end of the year. I would hope so. Boeing currently up 58% on this one. Not very close to selling that one at all really just yet. Corsair down 4%. I'd like this one to go a little bit lower before I actually start buying this one a bit more. I haven't bought that one for a while, compared to like Teledoc, Beyond Meat, Draftkings, Tattoo Chef. Those are the ones that I've really been focusing on. Draftkings, as you can see from last time, this has now got a lot bigger. Currently down 16%, and honestly, like, while I'm still down here at this much, I'll just average. I want to get that position, the average lower, and then you know what, if it does take up too big of a chunk of a portfolio, I'll rebalance it towards the back end of the year when Draftkings recovers, and if it's at break even or if it's up slightly, you know, I mean, we've still got the NFL season to come and everything like that, and yeah, I'll just rebalance it and go from there. But while I've got this opportunity to get my Draftkings average into like it's already in the $50 range, but if I can get it down to the $40 range, yeah, I will stamp your hands off for that. Ehang, which is a bit of a spec play, it's just lock it up, see where it is in 5 years, and it has taken a bit of a battering over the last couple of months since the short seller report, and you know, I always knew it was a high risk play, and that's why it just makes up a little position in the portfolio. And like I say, lock it away and see where it is in 5 years time. And if they are, you know, if drones kick off, they'll smash it because they're the market leaders. If they don't, then yeah, it might even be more than that. So we'll see what happens. Fintech acquisition, or eToro. So that's currently down 28%. I kind of played, once again, this is a little bit of a spec play. For, you know, eToro's booming, people are investing more than ever, crypto's booming as well, they bring out some strong numbers, and I just kind of played that as a bit of a short term kind of, you know, 30-50% hopefully by this year. Currently moved down in the wrong way just because of the whole kind of SPAC market we've kind of rotated into at the moment, so it's kind of not worked out. But yeah, I'll kind of see where that is. That's the position that I generally don't think I'll be in much longer. So yeah, if I can get a little profit, which I wanted to do on that one, I think they'll still pull out some really good numbers going forward. So yeah, we'll see how that one happens. But that's probably one position that I'm actually looking to get rid of at some point within the next 12 months. But obviously it will need to turn around a little bit before then. Facebook, which were up 55%. Callaway Golf, which I think is probably the best performing stock this month, up 24%. The earnings numbers were fantastic. I think people have just realised, like, oh, so that's what Top Golf's going to do for Callaway Golf. And yeah, really good numbers. GNOG down 6% on that one. I bought that like once, I believe, over the last month. But yeah, it would need to go lower for me to buy a little bit more than where it is at right now. But yeah, we'll see exactly how that one goes. I think realistically, I think that me to have Draftkings, GNOG and Gang is a little too much. So I think that one of them will probably go, but we'll see. That might not be this year, but it's just something that I am considering. InMode up to 126%. Once again, that's had a little pullback, but an absolute beast of a company. Planet 13 down 5%. This was up as well, last portfolio review. So yeah, I'm considering buying some. I'd like it to just go a little bit lower. Shopify up 3%, and they should be up way more than that after their earnings call. I still can't believe how good their Q1 was. Skills down 7% on that one. Yeah, just nuts. We'll thank the short sellers for that one. Square down 7% on that one. And then we've got Tattoo Chef, which has actually had a pretty decent month actually. We're up 11% on that one. I've got a really good average on that one, really good position size. I think that if Tattoo Chef was just to go up now from here, I'd be very happy now just to watch it for the next few years. Tesla stock down 8%, and then Turtle Beach up 46%. Such a weird stock, Turtle Beach. You know, that's probably one that I'm actually looking at probably getting rid of in the next 12 months as we get more and more into this gaming cycle. But I still think the gaming cycle is still very strong. Visa up 10%. And then Walt Disney up 48%. I think I don't know if I covered that one at the start. I don't know if I started with Walt Disney or Alibaba. But yeah. So yeah, that's the portfolio review today, guys. Obviously, it's been a bit of a bloodbath kind of month, but as always, even when the stock's down, the stocks are up, I'll be transparent and show the portfolio, and you can see the balancing acts that I'm doing. The dip that's stung my portfolio a little bit. There's still some. I'm still very happy with it, but you can see that a few of the stocks have moved down a little bit since last time. But yeah, hope you enjoyed it anyway. If you found it useful, subscribe. You guys are here all the time. Smash the like button. I'll see you next video.